Good afternoon, everybody, and welcome to our next monthly Hot Stock panel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to have you here. If this is your first time here, welcome to all my regulars here. Welcome to you as well. If you can hear me and I'm coming across loud and clear, please type VV Nation in the room so that I know that everything on our side is working properly. To my right, sitting side saddle, is my producer, Joey. Say hi, Joey.
Hi, Joey.
There you go. So he's the guy in the background that makes sure that everything goes well. And he's got the small job of helping me to look good on camera because, baby, I look good all the time. Ooh-wee. All right, so with that, what do we do every month in our hot stock panels? Well, we have a theme every month. This month's theme is looking at growth stocks with the best combination of value, safety, and timing. Things that you will only find within the VectorVest software. And everybody here on YouTube is always searching the channel to find stocks to get into. So every month we give you 7 stocks and we give you our background behind why we like the stocks. We give you opportunities to know when it's okay to be in, when to get out, and you know, that kind of thing. So we put a lot of work into putting these stocks together for you. And you know, if you are a subscriber to the software, you can always get this information. But if you're not a subscriber, we're going to give you an opportunity later in the presentation where you can take advantage of a fantastic deal to get into the VectorVest system at a ridiculously low price. Today, I have with me my 2 esteemed colleagues, Steve Chappell and Patrick France. And the interesting thing is that each one of us does a lot in the recording side or presentation side in the education department within the company. Steve Chappell does a lot with content for our subscribers, as well as he and I together, along with Patrick, do our daily trading room called the Jockey Club. So that's what we do, and we're going to each one talk about ourselves before we get started, and then we're going to give you our stocks. Most of all, if you're brand new and you haven't subscribed to our channel, please do, especially if you like the content. Today, I'm going to challenge everyone, if you like what you see here, to hit the like button. I'm going to challenge everybody in the room, if you really like what you see, to hit the like button. We're going to boost up our interaction with you guys today. So if you haven't already, and as the presenters come on, if you really like what they have to say, hit the like button, subscribe to the channel. At the end of the presentation today, we will give away a mug. All right, so you want to stick around for that. Looks just like this. Here's my VectorVest mug with my Cafe Bustelo in it for this session. So hold on. You got to type mug to be entered into it. And at the end of the presentation, you guys will have an opportunity to win a VectorVest mug today. All right. But you need to be here. If you're not here at the end when we pick the name, we go to the next person. So you have to be here in order to get the mug. I see the mugs coming across the room. And we have a way of selecting who gets into it. All right. So with that, we're at 2:04. We're gonna get right into it, and we're going to start off with Steve Chappell. He's going to be the first one to give his picks. He's the one that's got 3 picks today. Patrick and I both have 1. Wow, way to go, Mark. Mark just gave us a super chat. All right, I'm putting that out there. We never asked for it, but Mark just gave us a super chat of $20. He just gave us $20. And you know something? Mark is an avid supporter of VV Nation. If you guys ever feel compelled that you like the presentation enough that you want to do that, by all means, way to go, Mark. We do always appreciate it, man. All right, so you guys can do that if you want to. So with that, let's get us started with Steve Chappell as he starts to pull up his 3 stocks that he's putting out for you. He's going to tell you a little bit about himself and then go into the stocks. Take it away, Steve.
All right, thanks, Glenn. So my
privileged to be here. Got my esteemed colleagues with me, obviously, and just delighted that so many folks have turned out for this webcast. It's really great to see that. Well, let me introduce myself, I guess, first. So my name is Steve Chappell, and I've been with VectorVest now. I'll be 20 years in October. So it's been quite a ride. It's been awesome to see the growth, in VectorVest over the last 20 years. And we've always prided ourselves in delivering the best quality content and education you can get anywhere at any price. And I think we definitely do that. So hopefully you'll feel the same way at the end of this particular webcast. So we're going to take a look at my 3 picks. And since I had 3, I did put a flyer pick, I'm going to call it, in there, but one to certainly watch. I think it's one that should definitely be in your watch list for the coming days and weeks. And I think even here in the short term could be one to really start to move. So let's take a look at the 3. I'm going to go right into the product here. Hopefully Joey's got that highlighted and selected for me. And my 3 picks are going to be these 3 here. We're going to be talking about Crocs, Old Dominion Freight, and the flyer, Fulgent Genetics. And so we'll build up around what VectorVest has to say about all these stocks. We'll throw in some of our personal insight. And most importantly, at least for some, we'll look at the charts here as well and get a good feel for the DNA of the company and how they've been performing recently and what we can expect from all of these different perspectives in the future. All right, now I think everybody first and foremost did a terrific job at picking stocks. I think this is the first hot stock picking challenge where all 3 of mine are on the lower tier of the watch list, which is awesome actually, because the quality of the stocks are superb. So I'm just going to briefly introduce Stock Viewer because we've got people here that are viewing this for the very first time and may not even have any exposure to VectorVest at all. So as we work our way across the grid here, obviously you're going to have company name followed by symbol and then exchange. In VectorVest, we do track all the major exchanges. We also track bulletin board and pink sheets. N is for New York, O is for over-the-counter or NASDAQ. So that encompasses all the stocks that you're looking at right now. The little X next to the exchange letter indicates options are available on the securities. And so that can be of really strong interest right now in particular as the markets have been kind of high and toppy. And just know that, these are all, from what I see here, very good option candidates in one respect or the other, many of them from the covered calls type perspective, and that kind of thing as well. We're not going to talk much about options in this, but options are something that one can consider. Price would be the next thing. That's the current market price. We're looking at our real-time product. We do have a delayed product and also an end-of-day product, but we are looking at real-time tick-by-tick data here. If we look at the value is the first thing that you're going to come across in this grid that is going to be proprietary to VectorVest. When we say value, we're looking at what VectorVest feels is the intrinsic value for each of these stocks. And so that then forms your first basis for useful data, in that if the current price of the stock is trading below and hopefully well below that value that we quote, you're looking at an undervalued stock. And so a lot of different factors go into our valuation, but essentially, we have a hurdle rate in there where both the internal and external growth rates of the company to have a good high valuation score should far exceed the sum of interest, inflation, and even a yield premium over the average S&P 500 earnings yield that would be published on a current basis. So long story short, the more money a stock makes, the higher value is going to go. That's the rub. I mean, that's at the end of the day, that's really what we're talking about here. So when your stocks are undervalued, that's really great because it's giving you an idea that they do have the chance to appreciate down the road in terms of price action. Okay, now the next thing, stop has been moved here in this particular grid. It's normally over to the right of recommendation, but stop is a 13-week adjusted moving average that we publish. And so the keyword there is adjusted. It looks at a 13-week moving average, okay, but it's adjusted based upon the fundamentals of the company. So companies that have exceedingly good fundamentals get a larger adjustment downward on that stop price to keep you in good, safe stocks longer, whereas companies that are weak or very poor fundamentally will get a larger adjustment upward, in some cases consuming price, because we want to get you out of or even prevent you from buying, in some cases, the weakest stocks that are being traded out there in the stock market. So it really does two things really well. One is less, I guess, known than the other, and that would be keeping you out of harm's way, in terms of recommendation, as we'll see here in a little bit. Then you'll have a dollar change and percentage change in relation to that dollar movement. That's always looking at the prior day's close and then the current timestamp and where we are, okay? Now we get to what I would frame out as, or call, the fingerprint of VectorVest. This is our core analysis. In this first column here titled RV, I just want you to think of two words, then we might explain a little bit more, but the two words would be upside potential, okay? So relative value gives you the upside potential for any company. It's cast on a 0 to 2 scale. Above 1 is favorable to buy the stock. So anytime you come into a value of, say, 1.4 or higher, that rating would be considered excellent at that stage. And so as we're just taking a look at Crocs, a couple of things that we've seen so far. Crocs is nicely undervalued, and also it has tremendous upside potential over the next 1 to 3 years, as determined by that relative value score. And now you might say, upside potential in relation to what? That would be a great question. And it would be in relation to a similar investment in a AAA bond. Okay, so what we're saying here is Crocs is likely to give you a far better return on investment than just taking your money and buying a bond. Okay, and that again over a 1 to 3 year time horizon. Next column that we have is safety, RS, which is an indicator of risk. And I want you to think of these words here: consistency and predictability of financial performance. That's what we're analyzing. There's about a baker's dozen factors that are wrapped up into relative safety to help us make that determination. We look at business longevity, day-by-day price movement, and a lot of different factors. Essentially, companies that have the highest safety ratings, they're the ones that grow their earnings quarter after quarter after quarter, year after year after year, and in many cases can sustain themselves even through little bumps in the road, like say Merck, when they put out Vioxx, for example. That was a $1 billion problem. Well, Merck didn't go out of business. They had a tremendously high relative safety score, and they could withstand that little bump in the road. So the higher the safety rating, the more solvent the company in a way. But the reality, the main attribute is, I'll go back to where we started, they do the best job at growing their corporate earnings quarter after quarter after quarter, year after year after year. So companies that do the best job get the highest safety ratings. When we look at relative timing, now we're stepping out of really the core fundamental attributes of the stocks, and we're heading towards the technicals. So relative timing is a timing indicator. All these indicators are 0 to 2. So again, above 1 is favorable in terms of technical price movement. Now, we're really focusing in on the short-term trend, would be the cleanest, shortest definition I could give you when looking at relative timing. Short-term trend, okay? It does look at a number of factors. I'm not going to go into detail over those. It's very quick, it's very fast, it's dynamic, and it gives you a good idea on short-term price movement, okay, overall. So above 1, stock is in an short-term uptrend. The higher above 1 it goes, the faster it's climbing. And it's not a situation like a stochastics or something that you might have run across in your own trading where you reach these overbought and oversold levels. I've seen relative timings up in this neighborhood of 1.7 on stocks for months and months and months. And quite frankly, you would have regretted ever selling a stock. It's just giving you the idea on how fast it's moving up the page, okay? So 173 is very good. So, just with that quick fingerprint, we'll get to the remaining columns here in a second. But what have we learned so far? Well, with Crocs, it's undervalued. It's got tremendous upside potential over the next 1 to 3 years. It's relatively safe, but, not one of the safer stocks on this list. So they're not as predictable and consistent with their earnings. But boy, they've had some really big announcements. That's how you get that really high relative value score. And then with relative timing, it's really moving up the page very quickly. I think second fastest on this list aside from Louisiana Pack, which is a great building wood products, among other things, stock that's just been on fire. Now we take those three, we take the relative value, the relative safety, and the relative timing, excuse me, and we apply the vector formula, which is where we get our name, VectorVest, right? So anybody ever take physics, you're already aware of what a vector formula is, but it's the weighted sum of the squares normalized by 3. What we're really saying is, you know, all 3 of those factors matter. All 3 of them help us determine the VST score, value, safety, and timing, RV, RS, and RT, okay? We slightly weight a bit towards the timing because at the end of the day, we want you to buy stocks that are rising, not falling. We think there's hardly anything worse than you can do than buy a stock falling in price, okay? And so we account for that in our VST formula. We slightly desensitize the relative value, and RS would carry a weight of, say, 1 on you know, as far as the scaling is concerned. All right, and then next to that, another great indicator, this one's called Comfort Index, which I guess is the opposite or antithesis of Ulcer Index, although not by computation per se, but certainly by name, and the spirit of those 2 things, I think it is counter to Ulcer Index. So Ulcer Index is typically looking for a lot of high volatility among some other things. With Comfort Index, what we're looking at is price growth persistence, stocks that continually push up the page on a very frequent basis, and potentially can, you know, withstand some severe and lengthy price declines. Although if you get into a full-blown bear market, you know, nothing is fully resistant to that. So hopefully I've given you enough definitions there, because what I'd like to do next is, you know, just quickly take a look at the other 2 stocks, see how they're stacking up, make some observations, and then we'll go to the charts and take a look. And then we'll open it up to Patrick and Glenn to provide any additional feedback that they'd like to on these positions, okay? So we've covered Crocs. I would call this a prudently aggressive type of a profile where you have tremendous upside potential with some safety in place. Okay, if that safety rating were a bit lower, I would say it'd be aggressive. You know, if it was at or below 1, for example. As we get to Old Dominion Freight Line, bird of a different feather here, or feather from a different bird, or however that's going to best play out. But you've got both tremendous upside potential along with tremendous safety. And many of the stocks on this list do have tremendous, we said 1.4 or above is excellent, right? So here you're getting kind of the best of both worlds. You're getting still some very substantial upside potential, but also a much higher safety factor in terms of reliability into the future, okay? And so that one we'll take a look at as well. We can see here out to the right what I'm talking about in terms of this stock may not give you as explosive price potentially in the future as, say, a Crocs, but it's still got an earnings growth rate of 19% a year, and they're making a lot of money, over $7 a share on a current basis. They do pay a small dividend, not really anything to write home about or talk too much about, but very safe and very reliable, very steady small dividend would come with Old Dominion Freight. Then we'll get to the flyer. This stock was one of the hottest stocks of the COVID pandemic situation, large part due to what they do. So Fulgent Genetics, I'm sure you already knew what Crocs was. That's the funny sneakers that everybody's walking around with that look, Glenn would say, look ugly. I think they're the most comfortable shoe ever made. And I've got some $500 shoes that aren't nearly as comfortable as those $35 Crocs, just to give you an example. But Old Dominion Freight, you know, they're going to be moving all your supplies and everything across the country, and I don't see any slowdown in that in the coming time. Fulgent Genetics, the one here at the bottom, they do DNA sequencing. And I think DNA sequencing is here to stay. I think it's the future. I think it's going to become part of just your normal interactions with your doctor's office at some point here, not too far down the path. And quite honestly, they were one of the ones that did the best in terms of coming up with COVID testing. In fact, the CDC reached out to them again, I think it was about a month ago, and Fulgent is the one that the CDC has hot on the trail of tracking down some better testing in terms of the current variants that are out there with COVID. Okay, so the really cool thing is all of this technology that we're talking about has even far bigger implications just in terms of health monitoring and disease prevention and things of that nature. So it's a very interesting stock. The owner of the stock sold his prior business to 3M for, I can't remember how many billions worth of dollars. Okay, so you've got great leadership there at the top as well. Now, most importantly, what does VectorVest have to say about it now that we've got the story? So the stock is currently coming in at $73.04. The one thing I want to say before I forget, they have an earnings announcement, I believe, tomorrow. Okay. Now, VectorVest currently has a value at $202 a share. So it's the most undervalued stock on the list. And when we get to the chart, you'll see why. This stock got absolutely annihilated from its high because the general perception in the marketplace was it went a little bit too, as we say here in the South, a little bit too fast, okay? It got really heated up and really charged up the page, so it's come down quite a bit. In fact, it's come down so far that it's almost $20 below its stop price. So you're getting into some rarefied situation here where it's been creamed enough at this point where, my goodness, you know, because when we come over here and we look at the fingerprint analysis of VectorVest, the one thing that I hope sticks out to everyone is the relative value score. I have never personally seen one that high in the 20 years that I've been here. Relative value, remember, is your upside potential. There has never been a 2 that I'm aware of, and the highest one prior to this that I remember was like a 193. Now, that doesn't mean there couldn't have been one, you know, but I sure don't remember it if there was. So it's got the most upside potential of any stock on this list. And that's the way a flyer should ring out. You know, you should, if you're going to take a gamble, right, hopefully there's going to be some good reward on the other side. In terms of safety, just based on what we've said, this is kind of an emerging stock here. This is a stock that last year had a lot to do with their success. So I wouldn't expect a track record to be built up to the likes of an Old Dominion or a LPX or even a Crocs. Crocs has been around for more than a dozen years now, I think. But it's coming in pretty solid at 1.10. So here, this would be, I would classify as aggressive. We're getting down to that point where the safety rating isn't as big a factor as you'd like it to be to qualify this as, say, a prudent stock pick. This would be aggressive. So at least we got one stock in here, maybe for the aggressive folks. Okay, now here's the pain point. You know, relative timing, as we mentioned, is 0 to 2. It's clocking in at a whopping 0.16. So that means this sucker has been moving down and moving down fast. And of course, it's led all the way to a sell recommendation. So sell comes in when price goes below stop. If price is above stop, it's at least a hold. In order to be a buy, price has to be above stop. RT has to be above 1, VST has to be above 1, and price has to be rising faster than the stop price, okay? All right, now let's look at the 3 on the chart. And sorry, guys, I forgot I had to lay out all the columns there for everyone since they're seeing them for the first time. But I'll speed up with the chart analysis here. I don't think we need to spend too much time anyway. I think I've already got them, actually. Let's go to graph. Perfect. So here's Old Dominion Freight. We'll just start with them. And what we have is a stock that's definitely works its way up the page. You know, the biggest dip, that was in relation to the COVID pandemic back here on the chart. It does have some significant dips here along the way, largely in tune, though, with market pullbacks, and has been on a nice little charge, very consistent charge here as of late. As we look at earnings per share here on the bottom, this is in large part why the stock is performing so well. And so EPS stands for earnings per share, okay? Now, our EPS reading is going to be different than anybody else's EPS reading out there, as far as I'm aware. It's proprietary, so it has to be, unless, you know, they stole a formula or something, in which case they're in big trouble. But what it does is it looks at a trailing 12. Okay, we also look at the upcoming year-end consensus analyst estimates of all the analysts that track, say, an Old Dominion Freight. That would be thousands in that case, okay? And we take the consensus estimates for the end of this year and next year. And then we take all that data. We take the trailing 12, this year, next year estimates, and we project out or extrapolate out a one-year lead. So when we're looking at the EPS here in the middle of the chart rising, it's not just suggesting that earnings is rising right now, which of course in a way it is, but most importantly, it's that's where earnings is expected to be a calendar year from those data points. And so somebody might say, well, it just looks like it's kind of tracking up with price. Well, what's really happening is price action is being dictated by that 1-year lead in large part. Okay. And so what they realize is Old Dominion Freight's going to be making a whole heck of a lot more money next year than they are this year at this point. So anyway, that's the driver there. Very safe, very steady. I think this is a stock anybody can really think seriously about picking up just right now. I mean, there's, I don't see any wobble or anything on the chart indicating, now is not a time to buy. So looking good there. Let's go to the next one. So this is Crocs, a little bit of a different bird here. So we're starting to get more aggressive as I go down my list. This one goes towards the prudent to aggressive category. I would say prudently aggressive, where the last one was more retirement minded. So this is kicking it up a notch in terms of investor temperament, okay? Now Crocs, they make the funny looking shoes. Actually, they make a lot of different stuff now. So you might, if you've ever tried to look at them before, you might look at them again. Anyway, they just recently had an earnings report. They blew it out of the water, as they traditionally do, okay? And so you had a big gap up on the back of that announcement. You had what appeared to be actually even a small attempt at a retest that was met yesterday with substantial resurgence in buying. So you have what appears to be price action that still wants to really run here. And, that's what I like that, It had a little consolidation and it's reigniting and starting to charge up. Now, look at the jump here with earnings, right? You see that jump on the announcement and then continuing to rise? It's very similar to what you see back here, right? Jump, rise. What did the stock price do from there? Well, it had a little pullback after the announcement. That still might happen yet again here. But the prevailing message is what happened over the next several months, the stock continues to rise. So as long as the market holds up here, I think you're going to have a runner with Crocs. More from a swing trading perspective. Old Dominion, the one prior, more of a retirement-minded objective. So Old Dominion, even longer term hold. This one's looking good, maybe for several months, okay? Fulgent, a bird of a completely different feather. This is a extremely high growth stock. The one thing I didn't point out on the grid when we were looking at it, their earnings growth rate is actually over 50% last time I checked. And a lot of that did come from the government as a result of COVID. But I don't see any major step off the gas pedal other than, if COVID really starts to settle down here for a while, I wouldn't expect the kind of earnings growth that they've seen this past year. Not to say that it won't still be very substantial. I think it will be very substantial going forward, okay? I took the time to draw out a Fibonacci retracement because I know if there's a lot of people out there wondering when the low for Fulgent looks like it might be coming into play. We're sitting on that Fibonacci sequence number of 6108 on today's action leading into the earnings announcement tomorrow. So I found that interesting because I can't tell you how many times I've seen technical analysis line up to the letter of the law with an important announcement. Now, my suggestion here would be one of maybe two different things. If you wanted to play things very conservatively, I would wait and see what that announcement brings, okay? And if they have a very nice announcement, there's going to be plenty of run to the upside on this stock in that case. So while you may not nail the bottom, you'll be a lot more sure. If you wanted to try to say, hey, look, this looks interesting how everything's lining up, you might just start working your way into the stock. And I would do maybe something like put in a third of your capital. Let's wait a little bit, see how that announcement goes. As it starts to turn to a hold, think about putting another third of your capital in. And as it turns to a buy, building up to a full boat position. I wouldn't rush and just sink a ton of money into Fulgent based on this analysis right now. I think you'd want to work your way in here. But I think the large part of the damage has to be done by now on Fulgent Genetics. It's just too good a stock. It's too big a part of the future. And if the CDC, if you're the first one they call, you know, who's going to be the first one they call the next time around? Who's going to be the first one they call after, you know? So Fulgent Genetics is positioned. They're getting better and better with their return on capital invested and everything. The spread, it's very well run. Okay, so this I think is an anomaly and one I'm certainly looking at, and we'll see if you guys are interested as well. I'll turn it over to these guys to see if they want to give any feedback.
All right, Patrick, we'll start with you, man.
So far, I mean, I'm liking them. I like the earnings growth rate. What was it? The Crocs, I think, the one that just had earnings that you showed. I like the pattern we see there. You know, as I was going through trying to find some stocks for a day, I've noticed that similar pattern with a lot of the more gross stocks here, where they're gapping up to a new 1-year high and starting to run. I like seeing that pattern. It's a very, very strong sign. We'll see it with some of mine actually even. So yeah, I like what we see with these.
Cool. Glenn?
I'm with you as well. I still think Crocs is ugly shoes, but I can't deny, you can't fight the tape, man. The stock is a good looking stock, rising earnings. Time and time again after they hit earnings, the stock's price goes up just over and over and over. I like the Old Dominion. Old Dominion has been around in our software as a high relative safety stock for quite some time. And I think that as the country starts to open back up again, more companies are going to need more stuff. And I think freight, transportation, whether it's truck, whether it's shipping, whether it's air, I think is going to start to pick up as well as the country opens back up. And I liked all your stocks. The Fulgent stock, you know something? I like what you did with the, as Dr. David Paul would say, Fibonacci's. I like what you did with that. And I think that that's a very important point, that it could have some really good upside. So this is something to definitely keep in your back pocket. But this is all about growth stocks. The stock's price definitely, you know, after it went to sleep here, rose, man. And like you said, it got hot, pulled back, and right now it could be getting back up again, especially as you explained what the stock does. So that's, and you know, you gave a lot of great content here, and that's so important, especially setting it up for the people who are brand new to the software to break down what all of the column headings are. Those people who are interested, if you want a trial to the software, www.vectorvest.com/YT. 99-cent 30-day trial for what Steve did here today to give you a better insight on stocks that you look at. A lot of the indicators that we have are proprietary that you will not find anyplace else. And the breakdown that Steve gave in regards to our indicators is invaluable. So, with that, if you like what you saw there, if you like the content, and Steve did an outstanding job, if you like the content, make sure you hit the like button, folks. Hit the like button. I told you today we're going to definitely go after the interaction. Hit the like button. I think it's well worth for what he did. All right. Oh yeah, and Joey says you got to type in mug if you want to be in the drawing. We did do that again. Who put in there Glenn 2024? I ain't got too many skeletons in my closet to be running for any kind of office. I don't even think that I could run for librarian. I got too many skeletons in my closet. So, Steve, thank you so much for your commentary. You always do such a good job with breaking down things to give people an understanding on how to use the system. This is a system. It's a one-stop source that you can utilize for your opportunities to find stocks to get into. So again, Steve, I'm put a hand clap out to you. You won't hear it, but they will. That was an outstanding presentation. All right, we're going to head over to Patrick France. who's also a senior instructor like myself. I'll tell you what he does before he gets into his stock. So Patrick,
All right. I think
wow,
I'm live. All
wait
of
for
a
me
sudden
to
the
say
stream
go to
froze,
you,
so I wanna make sure
Patrick.
we're good.
Oh my gosh. All right, now, Patrick, take it
Well,
away.
welcome everybody. My name is Patrick. Oh. Glenn talking? All right, there we go. All right, welcome everybody. My name is Patrick France, senior instructor here at VectorVest. Everybody likes to refer to me as the mobile man. I do a live stream over on our Facebook page every Thursday at 11 a.m. Eastern, as well as some content that I help contribute to over on our YouTube page, which you guys can click on later and check out some of those videos. But I've got some stocks here today that I think are going to be some good candidates to keep an eye on, at least on our radar. That's one thing I typically try to focus on our Thursday mobile sessions is showing you guys some stocks to keep an eye on, how to get your list or your shopping list together, where to look for some of those stocks. And so this is going to be a great opportunity to be able to highlight those even more and bring some different stocks that I don't typically bring on Thursdays there. So what we're going to do is I'm going to take over, which I should have the mouse. There we go. And I'll go back to the viewers, go back into the stock viewer. And the two stocks that I have here today are Paultay and also Pool. Both of them have extremely strong relative values above 1.5, relative safeties above 1.4. So as Steve just mentioned earlier, the relative safety is more of that indicator of risk. These at 1.4 tell us that these stocks have less risk associated with them. And then looking at the timing on both of these, 1.71 and 1.65 tells us that these stocks are in really strong uptrends. Now, I think it was Kyle mentioning it earlier, asking people what types of searches or what types of scans that they like or what are their favorites. Both of mine came from the Unisearch and from the Searches Retirement folder and Premier Growth Stocks. I've been here since 2011, so about 10 years now or so, and this was one of the first searches I started learning about or started really utilizing when I first started working here at VectorVest, and I still use it to this day. So when they told me, look for growth stocks, this is the first place I went to. So hopefully that helps you guys out there get an idea of, some of the searches in here and, maybe spark some interest to start looking into this one as well. All right, so let's get back to it. Going into the viewers. Both of these stocks, undervalued, have good long-term potential, have less risk associated with them, are in nice, steady, consistent uptrends, have strong CI ratings as well, which is the stock's ability to withstand severe lengthy price declines. So at 1.6 or 1.66 and 1.68, these stocks do tend to snap back after pullbacks a lot faster than the average stock out there. And typically I have more of the aggressive stock. Luckily, Steve took that this time around. So I got two good ones here to take a look at. We'll go ahead and graph them. And while these graphs are getting set up and we're getting the graphs pulled up, I know Glenn was saying how he doesn't like Crocs, but at the same time, I bet that if they had some leg training soles built into them, I bet you he'd like them a lot more. All right, so we've got our graph. Let's go ahead, take off that EPS. Let's put it back on. Why is it showing like that? Let's go 1 year. There we go. That looks a lot better. All right. So first stock I have here is Paultay Homes. Just a beautiful looking equity curve. You see a nice steady rise from bottom left to upper right. You had this nice gap up and continuation here just about a week or two ago. Earnings also steadily rising like a stair-step pattern from bottom left to upper right. And because it's in the building and with all the news going on about lumber shortage and all that, it's an area that's been steadily rising and has that ability to pick up even faster over the next few months for at least a foreseeable future until something comes along that slows down that demand for lumber. So I like this stock also. One of the things I talk about a lot, especially in our jockey club, our trading room that we do Monday through Friday, is a pattern that I like to look for called the green line breakout. Essentially, it's a stock that's been moving up higher for over the last year and then gaps up most likely due to an earnings announcement, but could also be other news related incidents that causes that spike. But you gap up to a brand new 1-year high, and following that, you would simply utilize a horizontal line, put your line at the bottom of the gap up candle, and that would be your line in the sand. So as long as it stays above that line, that means the stock is going up, or AKA the stock's making you money. And so far with Paultay, it's done exactly that. Everything you'd want to see in a stock, it's done. It's continued to show resilience, especially with the way the market has been handling itself over the last few weeks. So I like this stock, especially in the industry that it's currently in. Glenn or Steve, any thoughts on that?
I like the stock. I like the industry. And I'll give some specifics on the industry when I get my stocks, but I like the industry. It's a happening, cool daddy-o industry, and rocking and that's right, I said that. And it's rocking and rolling, and it's hitting a new high over the last year. You got to love it. And earnings, man, everything about the stock looks freaking good. How about that?
Yeah, I haven't really been able to find anything too negative on it that would change my mind on it.
Steve?
Yeah, no, perfect. Just to give you guys a little experience, I just almost doubled my investment on my last home. I sold this past weekend. We had 51 viewings in 2 days and 8 offers. So home, if you're thinking that it's about to come to an end, no, it's not. And back to you.
All right, so that's my first one. Second one has a little bit more news behind it for the reasoning why I chose it. But the second one is pool. So this company provides pool equipment and everything that you need to have a pool at your house and maintain it, all the cleaning equipment, everything. With houses booming, with the housing market booming, this is obviously going to rise along with that. You see that green line breakout, just like with the last stock. So you'd put your line of sand right there around 410 roughly. But this stock had some actual news that, I really wanted to address. They just upped their dividend by about 40% roughly. And they also just announced that they're going to increase their buyback by, I believe it was 450 million or so. And as we've all seen, over the last 5-6 years, buybacks have been a hot ticket item to help boost your stock price. So with the buyback and increased dividend, you have steadily rising earnings, which shows the company is not only making money, but expected to continue to make money. This seems like a no-brainer. You have the chart pattern that I like to see, that green line breakout. You have strong news coming out behind the stock to help push it even higher. You have strong fundamentals behind it. So this is a win-win-win from all angles. I really couldn't find anything that would, make me second guess myself if I were jumping in on this right now. Your guys' thoughts?
Good open candle today on a new high. Everything looks good. Steve, before you leave, can we go back we got to have one last pool party. Talking about pool, we got to have one last pool party. I got to DJ your last pool party. Huh?
This is kind of a 1-2 punch in my mind, in that I was the only house for sale less than $1 million with a pool.
Wow.
So what that tells me is, I don't think it's a mystery anymore anyway, but it reasserts the point of view that people really want pools in their homes right now as they've been stuck inside. Maybe that's going to start to alleviate a little bit, but no, I love both the picks, Patrick. Good job, buddy.
Excellent.
Really nice.
Thank you.
So
that was pretty simple, pretty easy. So at this point, we can switch it over to Glenn so we can roast his picks next.
Wow, you done. I was getting ready to say you done good. Now I dislike you a little bit. All right. This is cool because not only do we do these hot stock panels, but we have fun. And, we're a good group of people in our education department. We bounce ideas off of each other. It is a good pool of ideas. A play on words. It's a good pool of ideas that we have here in our education department. So now, real quick before I get into who I am, I'm watching the chat. For anybody who's asking about crypto, keep it to yourself. We ain't doing crypto in here. This is growth stocks, not speculative plays. All right, just putting that out there. And right now, still, crypto is still a speculative play. It's gaining a lot of ground. I'm all for that. I totally understand that. But would you rather be in crypto, or would you rather be in stocks like we're showing you right now? There's a space for that. There's a place for that. And, that's why we're not looking at crypto. All right, so I'm putting that out there right now. And any other stock that you're looking at for us to look at today, we're not going to do that here. Patrick will do that tomorrow in his Facebook session for the mobile app. I will do that tomorrow in Trending Thursday. And guess what? Steve will do some of that in the Jockey Club tomorrow. So if you want to look at your own stocks that we're not looking at today, you've got 3 opportunities tomorrow in and of itself to get some of your stocks looked at. And if we still don't get to your stocks, you can always go to www.vectorvest.com/free. Fill in your information and you can get emailed to you a stock analysis report on any stock that you want. All right, so I'm putting that out there just so that you know. All right, I'm getting ready to do that. Yeah. So Patrick did a great job on his stocks. If you like what he did, again, hit the like button, folks. Hit the like button. How many likes do we have so far today, Joey? 157. There's no reason why it should be that low. I'm putting that up, unless you're telling us you don't like it. And if you don't like it, we can just shut down and go home now. All right? And Steve can get his stuff and Patrick, we can just go home. But if you like what you see, hit the like button, folks, and subscribe to the channel. One last time, after my presentation right here, we will be giving away a mug. If you want to be a part of that, type mug in the chat. We will be giving away a VectorVest mug. Looks just like this. Again, I'm drinking my Cafe Bustelo. Man, that's some good coffee. Yeah. All right, that's some good coffee right there. All right, type mug in the room so that we can pick a winner. And you have to be here in order to get the coffee mug. You have to be here, so you have to wait around to the end to do so. All right. Now, my name is Glenn Tompkins, Senior Instructor here at VectorVest. I've been here now for 17 years, and I do a lot of videos on our YouTube channel. This is not the only thing that we do on YouTube. If you come back and subscribe to the channel and hit the bell icon, you will be alerted to all of the new content that comes out on our YouTube channel. Patrick does videos. I do videos. We have a third person by the name of Jason that does videos. You guys need to check those videos out. A lot of the stocks that you're asking about, or a lot of that crypto stuff that you're asking about, we've probably got a YouTube video out on it. If you're into meme stocks, Patrick has done a lot of videos on GME. I've done videos on AMC. So we've got this whole stock world covered as far as the types of videos that we have on this channel. That's why you want to subscribe to the channel and hit the bell icon so that you'll be alerted to all of the videos that come out. Niall says, Glenn, 17 years, you must be almost 30. I look good. Whew. You see this face? I look good. 60. He did. Hush up, Joey. You know what I'm... All right. So with that being said, I'm going to get into the stocks that I'm going to cover today. All right, Joey's going to put me back in. Let's go take a look at the stocks. So far, again, I think that you guys are getting more than what you paid for. Oh, you didn't pay anything? Well, you got your money's worth. You're getting really good picks. And I state that all the time, that people come to YouTube for the purposes of finding stocks to get into. Today, we're giving you 7 freebies from the software. And if you still want to find these stocks on your own whenever you want to, www.vectorvest.com/YT to take out a 99-cent 30-day trial. All right. Now, I picked the low-hanging fruit. I've got the top 2 stocks in the list, LPX and DHI. Why? Well, because it's one of the fastest industries that we have in the software right now. If I scroll all the way over, both of these are in the building industry, or actually building sector. 2 different industries, though, building wood products and building residential commercial. So when you talk about building residential commercial, I got a couple of stats here. Housing starts in March were up 19.4% as compared to the expected level of 14%. That's huge. That's big. New houses are being built. Old houses are being bought. Everybody and their mama want to go live in a house. Why? Because I think that the paradigm shift of working in an office has changed a lot, and more people are moving outside of the inner city where they were closer to work and moving out to the suburbs and buying a home where they're better suited to have a home office. So I think that that's a big push as to why people are looking to either buy an existing home or build a new home, and residential building is increased a lot. Right now, building new housing starts is at near a 15-year high. That's huge for this industry. Now, there's another side of it. The other side of it is that we've got an infrastructure bill out there. So that goes beyond residential building. That now goes for commercial building, governmental projects, all that stuff. And you know what that's going to do? That's going to help the economy. If this goes through, it's still out there. The money's got to be spent. That's another story for another time. But the money's got to be spent. And if it is spent and these projects happen, people are going to be offering jobs, construction jobs. It's going to rise tremendously. So when you look at the whole building space, not only is it looking at the infrastructure bill, not only is it looking at residential stuff, but it can actually add into the economy by providing more jobs. So this is a two-headed type of scenario with this space. The industry is on the rise, and again, that's why I picked the stocks that I did. LPX, many of you already know that this stock is rocking and rolling. All right, it's an undervalued stock. We give an intrinsic value, as Steve talked about, on every stock. The stock is undervalued. Good upside potential. This stock should outperform a AAA corporate bond by 76% over the next 1 to 3 years. Steve had the best stock in the list with Fulgent, and you know something? I think that stock's got great upside potential, and I love that Steve brought it to your attention. The relative safety, the indicator of risk on LPX is at 1.42. The stock is a company that consistently meets or exceeds earnings expectations. This stock happens to be the fastest moving stock. Now, somebody said in the room, who was it that said, does the stock still have room to go? Well, we're going to talk about that with the upside, the safety, earnings per share. Earning is the engine that drives the stock's price higher. Positive earnings, growing their earnings at a clip of 34% a year. That's all great stuff to say that the stock's got great still upside potential. Next stock, DHI, DR Horton, trading at 102, value of 157, nicely undervalued. Great upside potential with relative value at 1.71. Great safety, happens to be the top safety stock in the list at 1.53. And relative timing tells me the stock's in an uptrend. Looking at a buy recommendation, positive earnings, $8 on $102 stock, 28% earnings growth rate. Again, the engine that drives the stock's price higher. That's why, as you can see, based on their combined relative value, relative safety, relative timings, they have the two highest VSTs in the list. But all of these stocks are really good stocks. Let's take a look at the graphs of these two stocks. Now that we've analyzed it, and again, nobody analyzes stocks the way we do. Nobody analyzes stocks the way that we do. And having that information at your hand by putting your stocks into this watch list like this to see which ones rank at the top, which ones rank at the bottom, is a great way to make your portfolio go higher. So someone said, well, does LPX still have room to go? Well, listen, a picture's worth 1,000 words, right? Bottom left, top right, earnings per share. Look at that earnings per share. I'm going to take volume off for a second. That's the picture right there. Rising stock price, rising earnings per share. Does the stock still have room to go? Yes, it does. What is it doing today? It's probably taking a breather, and that's all right. Why? Stock's been rocking and rolling. You know, give me the beat, boys, and free my soul. I want to get lost in your rock and roll and drift away. This stock is drifting from the bottom left to the top right. Who sang that song? Dobie Gray, just in case you didn't know. and love the equity curve. Now, the stock has got a pullback today, not pulled back enough. What would that be, Steve? Steve would know. Would that be a one black crow? But it's got to go halfway. No, is that not right? You're muted.
It'd be dark cloud cover.
A dark cloud cover. See, that's why I got Steve here to answer that. But it's got to go halfway through the candle in order to do that. And it could be a reversal if that happens. Even if that does, I'm going to give you a good level of support. I'm going to give you a couple of levels of support. Keep your eyes on right there. I'm going to leave it there. That's a good level. It tested, broke through. That's a good level of support if you own the stock to determine to yourself whether or not you think the stock's got good upside. That's probably a good line in the sand. If you want to give it a little bit more room, I'd probably drop it down to here. All right, I'll probably drop it down to here to give it a little bit more room. But nonetheless, that earnings per share, relative value where it is, relative safety where it is, this is a good play. Would I buy it today? No. Always make sure if you're going to pull the trigger on the stock, make sure you buy on an up day. Today, did I say up? Yeah. Make sure you buy on an up day, but not on a down day. Today would not be the day to buy it, but that wouldn't deter me from buying it. Just wait for the stock's price to go higher. All right, but you can't fight the tape. Bottom left, top right, nice smooth pattern. Had some pullbacks, but notice that the pullbacks weren't severe enough to say, oh, I don't like the stock anymore, and not very volatile, the smooth graph pattern. All right, Steve or Patrick, do you want to chime in on the stock pick?
Steve can go first.
Yeah, so this looks like normal trading activity to me, Glenn. I think you just nailed it at the very end there when you said wait for the up day, because I look back on the chart and just about every major swing high, it's pulled back every time it's gone to a high. But even the most recent two, and even going back down the page. So honestly, wait for it. Might not be today, obviously it may not be tomorrow, but whenever the next green up day is, that'd be the day that I would look at buying.
Somebody said that the earnings announcement on LPX was today, or is it today? Let me put earnings on. It's today. I don't know if it happened or not yet. I'd have to check that out, but it looks like it's either going to already happened, or it'll happen at the close today. It's one of the two. Patrick?
I mean, I like it. It's coming down to the last high, pulling back a little bit. Right. So, I'd like to see how it handles over the next couple of days if we can start to blast off and move higher. Can you put on volume there, Glenn? All right, so volume saw a bigger update relative to what it's been trading at. So that really, reigns supreme, that big update yesterday, more so than the pullback today. So, yeah, I mean, it looks healthy still. I think waiting for that next update is probably the most prudent thing to do with that one.
Yeah, because Papa needs a brand new pair of shoes. Ooh! All right, anyway.
Skechers. It's yes.
Listen.
Crocs.
You whatever, you put a little stab in there about the Skechers. You wait till you get to be my age. All right? You better hope you live to be my age. All right, let's go to my next stock. Next stock, DHI, still in the same space. You notice that the graph on this looks a little bit more choppy, a little bit more volatile, for the lack of a better word, but still bottom left, top right, earnings per share rising. Now, just like now that I have volume on, I am going to watch that. Look at the pullback on volume. I don't have nearly as much conviction as I had back here. All right, volume is conviction. And when I'm watching a stock's price go up, like we saw back here, I want to make sure I'm going with rising volume, or back here, rising volume. This may catch your attention, but earnings per share, even amongst that, still nicely stair-stepping effect. Earnings just happened not too long ago. Earnings kicked off on April 22nd, and look at what happened since then. So I still like the play. I'd really like to see if the stock can take out this most recent high before I pulled. And with today's activity, where are we stopping right at? That high of 102.59. That's an estimation right there. 102.59. It's challenging it. It's a good level of resistance. I would probably wait until I get above that level before I pull the trigger. But again, A picture's worth 1,000 words. Love the equity curve. Not nearly as smooth as the LPX, but going higher nonetheless. Guys?
I mean, Paultay and this one, both are in the same boat. They're both really, really hot stocks right now. I believe D.R. Horton is the #1 home builder, just because I've been looking into, possibly buying a new home here soon. Happen to pick the worst time possibly to do it. But, D.R. Horton is by far the leading industry leader. And that's really the one that we want to look at there.
There you go. All right, Steve?
Darlene, both. You want to wait for a market update and a stock update on all these stocks, really? Okay, good. This is a good question. Final word on home builders. Watch interest rates. So late this year, careful. A lot of people expect some big jumps at some point, just don't fall asleep at the wheel with interest rates. But I love the picks. They got months to run still. No problemo. Watch interest rates.
Yeah, and talking about interest rates, I will be covering that in Trending Thursday tomorrow for sure, where I do a deeper dive into the market and from the market timing perspective. All right, so with that, a couple of things that I want to get across. One, if you liked everything that we did today, all three. If you liked everything that we did today, please hit the like button. If you're brand new, you've never been here before, and you like the commentary, please subscribe to the channel. Please subscribe to the channel. We're doing a great job of growing it, but it's the VV Nation out there that continues to make it grow. Once this is up on YouTube, please share it. Share it. And this is not the only thing that we do on YouTube. Again, Patrick and I do a lot of individual videos on YouTube. If you haven't watched them, go back. Take a look at the commentary that we give. It's all about you guys. So we put out content that you want to see. All right. So coming up tomorrow, for all of my regular VV Nation people, Steve will have the Jockey Club tomorrow. If you want to talk about a couple of his picks tomorrow, ask him about them. And let's take a look at them along with maybe a couple of your stocks that he may want to look at coming from today as well. Patrick tomorrow at 11 o'clock on Facebook. We'll be doing a stream on our mobile app. For everybody who is a subscriber to the VectorVest system, you have access to the mobile app, and I think that Patrick does an outstanding job every Thursday at 11 a.m. on Facebook Live, showing you how to use the software on your mobile app, whether it's on your phone, whether it's on your iPad or anything. You can do a lot of what we do on the fly from a mobile perspective. And I will tomorrow be doing Trending Thursday right here on YouTube at 2 o'clock. I challenge you guys to invite someone to the stream. Invite someone to the stream, and you can start them off on a path to be able to better understand the market and make money in the stock market. All right, so with that being said, one last thing. We've got a course for many of you have a hard time from an investing perspective knowing when to sell. We've got a course that we've got coming out called When to Sell. Go to our website. There's a link for it. There's a brand new course. Steve, are you part of that course?
When to Sell, yes.
Yes, so Steve will be a part of teaching that course. So in that, for a lot of people, is a hard pill to swallow when it comes down to making money in the market, is knowing when to sell. So we've put together a course, brand new course of knowing when to sell. And last but not least, if you want access to the system, 99 cents for a 30-day trial, www.vectorvest.com/YT. Folks, we gave you 7 freebies today for some of you who are not subscribers to the VectorVest software. We've given you 7 free stocks to look at. To get to the When to Sell course, it's www.vectorvest.com/sell sell webcast. All right, sell webcast. Oh, we got a free webcast coming up. So before you even think about taking the course, go to the free webcast, www.vectorvest.com/sell webcast. Come check it out. Come check it out. See if it's something that you're interested in. And again, Steve Chappell will be part of teaching that course, especially if you like his commentary.
On that subject, Stan Heller,
yeah,
Dr. David Paul, and Jerry D'Ambrosio are the other speakers.
So there's 4 top-notch people teaching this course for you. All right, now we come to the time, who wants a mug? No, don't type mug again. Oh my gosh, don't type mug again. All right, so here comes Joey. Joey's going to tell you who's going to win the mug. Looks just like this. Martin Lawrence. Martin Chauvains. Martin, are you here? Martin Chauvains. If you ain't here, you ain't getting it. I told you need to be here. All right? Don't make me come through this screen. Don't make me come through the screen. Martin, are you here? All right. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Next. Sorry, Martin. Oh, there he is. Man, you just made it because I was finna roll it again. All right. Martin, you have to send an email to connect@vectorvest.com. Again, the email is, you have to send it to connect@vectorvest.com. Congratulations, Martin. Congratulations. Everybody else is saying, I'm here. I can see your name. How are you going to say that I can see your name? Takanis to you too, Nies. Takanis kala, kalasi. And everything else in Greek is all cuss words I cannot say here. All right? I cannot say here. So thank you guys for being here. Can you put all 3 of us up again? Thank you guys for being here. Thank you to my esteemed colleagues. I do love you guys to death. I think we had a lot of fun, and I think you guys did an outstanding job on the picks. Man, make sure you come back. Every month we have a hot stock panel, and June will be another theme. June will be another theme. How many likes did we get today, Joey? 213. I'll take that. Thank you very much for the likes. Thank you very much for the interaction. Don't forget to subscribe, and don't forget all 3 of us will be doing something tomorrow, whether it's the Jockey Club, our trading room, the mobile app at 11 o'clock on Facebook Live, or Trending Thursday at 2 p.m. here on YouTube. Thank you guys for all being here. We appreciate it, and thank you for helping us to grow the channel, and thank you for my people to be here. With that, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii, assalam, shalom, namaste. This video is over. See ya.